Hey, everybody, it's Nicole Benjamin, your host here at Seeking Alpha, to bring to you another episode of the Weekly Grade with Stephen Cress. And we're bringing to you market insights in minutes. And of course, joining us again for another episode is Stephen Cress, VP of Quantitative Strategy here at Seeking Alpha. He is the amazing guy behind a lot of the products here that you see on the site: Alpha Picks, Pro Quant Portfolio, and our newest product, our growth and income portfolio. So if you haven't checked it out yet, do take a look. Steve, thank you so much for joining us today.
Yeah, thank you so much for organizing it. I really appreciate it.
Absolutely. Now, I want to jump right in. I see here on slide 3 that the chip stocks have taken a dip following a massive rotation out of tech. So, for investors who are watching the major semiconductor indexes drop, what helps determine whether this pullback is just a short-term speed bump or if it's gonna be another buying opportunity?
Well, I think market sentiment has a lot to do with that. Obviously, the geopolitical environment has been very, very volatile, and that has had an impact on many technology stocks and semiconductor stocks. In addition, with the run up that we've seen in a lot of AI stocks, there is nervousness about valuation. And obviously, companies are a key component suppliers to many of the AI stocks. So I think having a combination of volatile geopolitical events and a bit of an overextended valuation in many AI stocks in recent weeks, there's been a bit of a pullback. And that, to me, is more or less responsible for the pullback, much more so than fundamentals, because many of these companies on fundamentals, on the back of their recent results, have beaten both top and bottom line expectations. So, for the most part, a lot of these chip companies look really good.
All right. Well, you recently highlighted Credo Technology Group Holdings as a strong buy. So when we look at the factor grades, what in the data tells us that, this chip is gonna be worth considering despite, this broader tech sell-off?
Well, this company did have a sell off, but I feel like it's on fire coming back. There's just really a lot of potential for the company. It's been one of our top performing stocks in Alpha Picks as well. We put it in Alpha Picks back in February of 2025. So we've had it for a little bit more than a year. And I think in that brief period, just a little over a year, it's up, I believe, 275%. But despite that rally in the last 52 weeks, if you look at the table that we have on the right hand side, you'll see the factor grades. And in those factor grades, you'll see valuation, growth, and profitability. These are metrics that we score. And when we score them, we actually do it on a sector relative basis. So when you look at the value grade or the growth grade, you can see instantly how it compares to the rest of the sector. And the valuation is in line with the sector. You can see it's a C minus. But more importantly, as I mentioned, the stock is up about 270% over the last year. And over the last 6 months, it's up a solid amount, but the valuation is almost exactly the same now as it was 6 months ago. And when I look for the 6 month performance, I can see the stock is up 82%, but the valuation framework is exactly the same. And the growth for the company, as you can see, it's an A plus relative to the sector. And the growth is just as strong now as it was 6 months ago. So I would say really ignore the price performance. And how well the stock has done, and just look at it for the growth that the company has now, and that the valuation framework is very fair. And also, I will mention the profitability has actually improved. You can see the profitability grade is an A minus now. 6 months ago, it was a B. So the company has actually become more profitable in that time frame. So I think there's a lot of positives out there. Uh, Within the IT sector, it ranks 30 out of 532 stocks that we cover. And within semiconductors, it ranks 12 out of 69. This company has had explosive growth. It's had triple digit revenue growth from its high connectivity AI data solutions, AI data center solutions business. And it has also experienced rapid growth from their electrical cables, which are Ethernet cables and also optical cables. The revenue growth, I mentioned what the 1 year return was for the stock, but the revenue growth year over year is even more impressive. It's up 206% in terms of its revenue growth versus the sector at only 11.3% time 11.3%. So it's absolutely crushing it in terms of revenue growth. And the EPS forward growth rate, the 3 to 5 year estimated growth rate from analysts is 39% versus 18% for the sector. So on both the top and bottom line, it is absolutely crushing the sector in terms of its growth. And as I said, the valuation framework is very fair, being that it has a C grade.
Well, that's perfect. And speaking of Credo being a part of Alpha Picks, we've seen that this portfolio has been outperforming the broader market for some time now. So, what should investors know about this specific, data rules? Like what data rules are behind Alpha Picks model that, kind of allows it to capture these massive triple digit returns?
So with Alpha Picks, this is a portfolio product that we introduce 2 ideas a month. So it's not a lot of ideas. We're just taking our 2 top favorite quant ideas every month, but you can see it's had a very good track record. And what we do is we focus on companies that are collectively strong on value, growth, profitability, momentum, and positive EPS revisions. And when we identify those stocks that are strong on those fundamental metrics, the ones that come at the top of our screens get recommended for alpha picks. And you can see it's worked out really well. So, in a nutshell, we're looking for companies that have really strong fundamentals. That's what our quant system does. It isolates companies that have good fundamentals. And Alpha Picks is a product where we bring forward the 2 best stocks every month. And you can see for the last 4 years since we've introduced it, it's got a great track record. It's up over 400% for the last 4 years versus the S&P 500, up 95%. But you can see on all time periods, whether you're looking at 1 year, 3 months, or year to date. Year to date, the returns is still amazing. It's up almost 40% year to date versus the S&P up 8%. But again, we're doing is we're identifying stocks that have really strong fundamentals.
All right. Well, I think we'll leave it there, Steve. Thank you so much for joining us today. And for everybody listening in, go ahead, click the follow button on Steve's page if you haven't already, and take a look into Alpha Picks, take a look into Credo, see if that might be right for your portfolio. And if you haven't already heard, we are doing our site-wide summer sale, 20% off all products now between now and June 30th. And we'll catch you here next time. Thanks so much. And just for some housekeeping, here is our disclaimer. Past performance is no guarantee of future results. Content is offered for information purposes only. Unless stated otherwise, any and all individuals participating in the video are third parties that include both professional investors, individual investors who may not be licensed or certified by any institute or regulatory body. Unless stated otherwise, the views or opinions expressed may not reflect those of Seeking Alpha as a whole. The accuracy and completeness of content shared cannot be guaranteed. Seeking Alpha does not take account of your objectives or financial situation and does not offer any personalized investment advice. Seeking Alpha is not a licensed securities dealer, broker, U.S. investment advisor, or investment bank.